Hey, I am back with your market insights brought to you by the Capital Markets Trading Desk right here at SunWest. Every week, I break down what's happening in the economy, mortgage rates, and housing, breaking down the market so everyone can understand it. So bond markets remained under pressure this week as investors weighed shifting expectations around inflation and interest rates. Higher oil prices added to concerns about renewed inflationary pressure and broader geopolitical risks. Equities stayed close to record highs, with stocks extending their recent gains despite some volatility. Overall, markets remain cautious as investors balanced inflation risks, bond market volatility, and a resilient labor market. So let's break down the numbers. First, let's talk about consumer spending. U.S. retail sales fell 0.6 in July, marking the largest monthly decline in more than a year as consumers pulled back on purchases from online retailers and auto dealers. The nominal value of retail purchases, which is not adjusted for inflation, also saw its steepest decline since May 2025. Now let's turn to industrial production. U.S. industrial production rose 0.2% in July, marking a second consecutive monthly gain. The increase was supported by stronger manufacturing and utility output following a revised 0.3% increase in June. Jobs? All right, U.S. initial jobless claims edged lower last week, remaining near historically low levels and signaling limited layoffs across the labor market. Initial claims fell by 6,000 to 206,000 in the week ending August 15th, while continuing claims rose 1.8 million in the prior week. Employers have been slow to fire, but equally cautious about hiring, leaving the labor market relatively stable for those with jobs, but challenging for job seekers. Now let's turn to housing. The MBA's mortgage applications index fell 0.4% for the week ending August 14th. Purchase applications were down 2%, while refinancing applications were up 1.5%. The average 30-year fixed mortgage rate stood at 6.77%. But the bigger issue remains housing affordability. Yes, the affordability crisis continued to weigh on activity, with housing starts falling 12.4% in July to an annualized 1.239 million units. So what's the big picture? This week's data points to an economy that remains resilient but uneven. Consumer spending weakened while industrial production continued to expand. The labor market remains relatively stable, with layoffs still near historically low levels, although cautious hiring continues to make conditions difficult for job seekers. Meanwhile, housing remains under pressure as affordability challenges continue to weigh on activity. And with bond markets under pressure, oil prices adding to inflation concerns, and stocks remaining close to record highs, investors continue to focus on the path of inflation and interest rates. So looking ahead, investors will be watching upcoming inflation and labor market data, movements in oil prices and treasury yields, and any signals from Federal Reserve officials for clues about the outlook for interest rates. With markets balancing a resilient economy against persistent inflation and housing pressures, the next round of economic data could be important in determining whether the recent strength in stocks can continue or whether renewed inflation concerns begin to weigh more heavily on markets. And that's a wrap on this weekly Market Insights. If you found this video informative, hit that like button and follow me for more weekly market insights, and share this with someone who wants to stay ahead of what's happening in housing, mortgage rates, and of course the economy. Until next week, stay informed, stay ahead of the market, and remember, nothing is beyond reach. Buffy, out.